Alright, I'm going to start the recording right now. Good afternoon, everyone. Today is Wednesday, the 18th day of February, 2026. Well, we just had a long trade here on the ES. My stop is at break even on it right now. I'm going to log in. I lock in a couple of ticks on that. That'll be our first trade of the session. It should make it up at least to the mid-band right here, but if you look at the DOM, there's nothing up above it slowing it down. Okay, there's not really any target up there either, but there's nothing slowing it down. And we ended up getting 4 ticks on that one. That was this black arrow right here. Now, all this stuff down here, the reason I created that, the reason it came to fruition, is because I was looking for a way to minimize the number of stop outs that we get on these guys right here. So like this one right here, alright, where if it's going up like this, it crosses there, it's due to turn around on the very next bar. That's a reversal signal. So you wouldn't want to take that one. But this one right here, it didn't have that. So that's not a reversal signal. You see, that was the whole idea behind behind this creation of synthetic divergence and all that stuff. Now, the synthetic divergence, hang on, Paul, last night I was thinking about, those other things. Well, that's what brought us to where we are right now. Let me go put that one trade in here in the Wednesday totals, okay? Because we just did make 4 ticks on the ES. Which one is ES? This one, right here, 4. And number of trades so far, 1. And our stop outs would be 0. Oops, I entered that in the wrong column. 1, 0. Okay, that makes more sense. Just keep track of what I'm doing. And this is 41, not 42. Okay, that's better. Alright, so what I was saying is this trade right here, you see how this didn't give you a reversal signal down here when it gave you the black arrow from the outside of the band? This one over here, same thing, it didn't give you a reversal signal when it gave you the black arrow from the outside of the band. This one right here, it wasn't really outside the band, but it did give you the reversal signal. And this one right here also gave you the reversal signal, and that was outside the band. This one right here, that didn't actually give you the reversal signal there. Pretty close, but not quite. But that's how, that's how one thing led to another, and we ended up with the synthetic divergence trades. Now, so we're short on the yes. Well, not right now. It hasn't crossed. It didn't cross right here, Wayne. It's got to cross right in there to get it. There is something to be said about just having a lot of divergence like that. I started creating something last night, but I didn't finish. I did it halfway, and I kind of screwed it up. And this morning, I don't know if you guys saw in the Telegram channel when I am the time of day that I had put some of that stuff out in the Telegram channel. This 6:23 a.m., 6:43 a.m., 6:36 a.m. I'm usually pretty tired about that time because you can see I had been up for a long time. I'm usually pretty tired about that time, but I did screw a couple of things up when I put that stuff out, and I'll explain that to you in a minute. So, before I get too much further, I want to show you something else that I did today. Alright, now some of you guys, this is what you want right here, okay? This is ideal. That would be okay too. That's what you want. You want to cross through the blue on the way up out of the cover, okay? This is okay. This is okay. This just hit the top of the cover, but that's okay. This is okay. Right? This didn't touch anything on the way out right here, so I wouldn't say that was a trade. Okay. I want it to hit the blue on the way out, because a lot of times when it doesn't hit the blue, it kind of stagnates for a little while. I know I'm on 100 range NQ. I wanted to show you something about that, though, Paul. Mikey, one of our newer subscribers, was using the 200 range, and I just wanted to show you something about this. I don't have a way to code it so that it's going to put an arrow on, but what you can do is, and what I did do is I created an alert over here, and I'll show you. Oops. I created the alert. I thought I created the alert over here. Well, I'm going to create the alert for you, and I'll show you how to do that. Alright, so down here, this is the synthetic divergence right here, right? And anytime that goes out of the cover is when you're possibly going to have a trade. So this is how you would create an alert for that. Alright, well, you can do it straight from here. This is probably the best way. Do it straight from here. Just click on this, 3 dots, and do add alert for the range trigger. Now in here, you want to do crossing. We'll do crossing up first, okay? And you want to use, not the optimized snipe, you want to use synth div line, that one right there. Crossing up, and the value on this would be 64. Okay, because anything that hits the top of the cover would be 65. So if it goes above 64, that's pretty good. So crossing up above the value of 64, that's when you want to start looking for shorting opportunities. Okay, so your notification, your message in here would be, let me see if I have it in. Nope. In my Control Z. Okay, it'd be 100 R short, maybe. Okay, because it's only part of the puzzle. It's only part of the puzzle right there. It's one piece out of 2, but that's one piece. And so I hit create on this. You can do notifications. I'll just do show total notifications, so it would pop up over here. I'll hit create on that. So that's created right here on the 100 range NQ. Now I'll do another one for the longs, right? Do add alert on range trigger and do the same thing. Come in here and do crossing down this time, and you want to do the synth div line, and this one's going to be minus 64. Okay, and the message on this one will be paste 100 range long. Okay, and we'll just copy that, copy that, and stick it right here, and creates got the same toast notification. Now the notification here, if I have the app running on my phone and I click this, it'll notify me on my phone. You can have it send yourself an email. This is what I use to send it out to the Telegram channels. When I use a Telegram channel, you can have it play a sound too if you want to. But for right now, I'm just going to do the show toast notification. Alright, and you hit create, and then now over here, we just got the 100 range long and 100 range short. So whenever this goes out of the cover, this one right here, the red, goes out of the cover, either long or short, it's going to give you a thing here that tells you go look and see if it's an actual trade. Okay. You want it to break through the blue, and you want it to cross the step line and get out of the blue. So right here, cross the step line, get out of the blue. Right here, cross the step line, get out of the blue. Right here, cross the step line, get out of the blue. Alright. You want to cross the step line first. You don't want the step line, you want the step line to stay in the blue. You want the step line to stay in the cover. Like this one right here, I wouldn't want to do. Alright, you want the step line to stay inside the cover. Basically what you're doing is you're identifying spots where things are pulling against each other. Okay, like this is going up and this is going down, and it's suggesting that the synthetic divergence is the weaker of the two, and it's getting a temporary pullback that's going to snap back down to the other one. Okay, the cover is the light blue. Yeah, cover. It's actually even called cover, Jeff. Hang on. Let me go back and see. I'm on 100 range in Q, and Paul, you said something else. Oh yeah, that's that. The mid-band's info on the band to the band trading link. You find that. I'll show you that in a minute, Mark. And Jacob said if the red line crosses the blue line, but then continues up past the cover and through the white line, is that still? Yeah, that's still good. That's still good. You're talking about one like this right here. That's still good. That's really good, Jacob. So I'm saying that synthetic divergence is important when using the arrows, and that to take the arrow trade only when there isn't synthetic divergence. That's what started the whole, yeah, exactly, Dan. That's what started the whole creation of the synthetic divergence. Was I was finding something to eliminate these right here. You know, when you get these ones at the beginning of a strong trend and you get stopped out a couple times using the range band. Mark, you do want to trade when you see this, people. You got it completely backwards. You do want to trade when you see this right here. That's exactly what you want. Okay. See this one right here? It didn't hit it right there. It didn't cross it on the corner. It does have a lot of divergence, so it'll probably work out anyway. But it didn't cross the corner on the way up. Okay, so I know I'm on 100 range NQ right here, but I wanted to show you how to set the alarm. Not the alarm, the alert for 100 range NQ. Okay, so we should see some alerts popping up here. We should have seen one right there a minute ago, I think. If I said it right. Let me just make sure I did set it right. Let me go in here. It's synth div line. Hopefully that is the right one that I set in here. Let me just go inside and look again. Synth div line. It says it there. And this one. Nope, I didn't. I screwed this one up. Wait, did I grab the right one? Did I only do one? I didn't do a short one? I didn't do a short one. I didn't do a short one? Really? Huh. Okay, let me look at what I did do, because I probably screwed it up. Right, if it goes down below 64, that's when you want that. Now, that's why it didn't give me a long over here a second ago. I mean a short over here a second ago, because I didn't do the short. Okay, so if you do it again, you do add this on that, and do the trigger. You want to do crossing up, and you want to do this non-optimized snipe, but synth div line. Crossing up, value 64. Okay, and the message on this one is going to be range short. I thought I did this. I'll have to go back and look at the recording. I could swear I did this. Anyway, we'll do it again. Okay. Now, let me just check and make sure that the notification is right. Yeah, it's just a toast notification. Synthetic div line crossing above 64. So that's saying when this happens right here to let me know. Okay. And the other one, this one, is saying when anytime that this happens, the red goes down below out of the blue. Anytime that happens, it's saying to let me know. Okay. Now, it's a lot of stuff. Travis, at 1332, the black arrow is saying to go long because the arrow is at the bottom, but the synthetic divergence is saying to go short. Correct. At 1332, this one right here. Yeah, actually. You know, in the last meeting, Travis, last week on Wednesday, in the last like 10 minutes, that was exactly what I was trying to show you, and that happened. But the thing that happened in the last meeting was, you could get a trade. It was on the white bar, I think, and you get a trade where it's giving you synthetic divergence, telling you to go against the white bar. So you can take that synthetic divergence and still jump in the trade if it doesn't go, you know, if the synthetic divergence doesn't continue on below the white bar. Like if this one right here would have stopped right here and then started to go up, and you had a white bar on there, you could have taken the long trade with the white bar as well. You could have made money with the synthetic divergence on the short, and then jumped in the long once it closed up on that bar. That was at the end of last week's meeting. Okay, but synthetic divergence is right here. This is synthetic divergence right here. Right? This is divergence. It is synthetic divergence, but it's not crossing the blue line right here. That's really what I'm looking for, is the cross of the blue line. Okay. This did actually cross the blue line down here, so I guess that does sort of count toward that, but I like to cross the blue line when it's more like this. You know, it's more like this. I do like seeing some divergence between the two. That's something like this one right here. Those work like almost every time. Okay. Alright. So we got a lot of that out of the way. Now, the option stuff. I want to cover some of the option stuff with you guys. Okay. Before I get into that, there was a question about the mid-bands. Before I jump away from the mid-bands. Mark. Before I jump away from anything else, I'll leave that there. The mid-bands, mid-bands are inside here, right? Right here's the mid-bands. Okay, by default you have the outer bands. And what you're looking for in the outer bands is the arrows outside the bands. Those are the ones that you want to take. The arrows outside the bands are the ones you want to take. The ones inside the bands you don't really want to take. Now, if you happen to have a synthetic divergence, if you have a synthetic divergence and you have an arrow that goes with the synthetic divergence, those usually work out really, really well. usually it's a white bar when that happens. But this is with no mid-bands in here. Usually these arrows, the range arrows, the swing bands arrows, usually they're counter trend trades. And I know some of you guys, you don't like trading counter trend, and I get it. This right here is a synthetic divergence short, and I get it. The reason I created the mid-band thing was so that you could trade with the trend. You could use the same sort of information, but trade with the trend. Okay, so in here you're just going to hit show mid-bands. All right, and that's going to put the mid-bands on. Now, these mid-bands are basically giving you the trend, an idea of where the trend is. All right, and the purple bars within the mid-bands, those are bars that straddle the mid-band. Okay, and when you have one that straddles the mid-band and it comes out, the trigger comes out of the oversold. All right, when it straddles the mid-band and it comes out of the oversold, and the mid-band is blue like that, if it closes above it, then you're looking for a long. Okay, if the mid-band is red and you have a purple one, we didn't get any in here. Here's one. If the mid-band is red and you have a purple one that straddles the mid-band and it comes out of the overbought, that's when you get the purple. Okay, and that's a trend trade. That's what those were for, Mark. Okay. And so I created it just when it straddles the purple is just when it straddles the mid-band, but I created another one, the white bar, that happens when it's on the other side of the mid-band. It's on the opposite side of the mid-band, and it's oversold, and it comes out of the oversold. It's like it's gone. It's like a deep pullback that's going to continue in the direction of the trend. The mid-band being the trend. Okay, the mid-band direction being the trend. You got to turn that on separately. It's this one right here. Intraband mid-band bars. Those are the white ones. So if you get a white one like this with red, then you're going to sell the down close. Okay, a white one with this with red, you're going to sell the down close. If you get a black arrow with a white one with red, those usually work out really well. You're going to sell the down close. Okay, this one right here, the mid-band was still red. When you got this, the mid-band was still red. It hadn't turned to blue until that bar closed. So you're still going to sell the down close right there. Over here, you're going to buy the up close, right? Because the mid-band was blue right there. That's it. That's what those bands are. I mean, those bars are for within the mid-band. Okay, so you can take trend trades using the bands. You can take trend trades. So, yes, that is what that was all about. And the reason I created the synthetic divergence line was to help you identify trades that aren't likely to move with the black arrows in the direction the black arrows are going. Okay, like this one right here, for instance. I mean, I know that black arrow is in the middle, but if it were outside the band, and you had synthetic divergence saying that's a reversal. That's a reversal bar right there. So the next one is going to go down, and go down just enough to stop you out, or to take a full bar's worth of profit in this case. But I wanted to show that to you. Okay, I wanted to make sure you all understood all that stuff. How do you get the green bars to show you I have all red with some white? These green bars? John? Here, I'll tell you what to do. John, hold on. Let me minimize this, save this, and give you this. Okay. This is, I'm going to put this on the webpage somewhere. That's another thing I got to show you guys. I'm going to put this on the webpage somewhere. This link right here, John, I'm going to give it to you right now. Any of you guys who are subscribers, you can click on that link. And when you do click on it, it's going to open this up, exactly this thing right here, a copy of this. And you click on the word copy in the upper right hand corner. If you click the word copy in the upper right hand corner, it'll prompt you to rename it. And when you rename it, now it'll be yours. You can play with it, but it'll be all set up just like this. Okay. Now, I just got sidetracked again a little bit. I did create a new website. It's called tvtrades.ai. Right? The tvtrades.com one. It got kind of junky looking, and over time, I actually paid a guy to create this for me, and then I had this one done. And this it's basically got all the same information. It's just a lot neater looking, and this is tvtrades.ai. So if you haven't taken a trial, this is where you'd go to sign up for the trial. If you want to watch, you can go to it's tv-trades.ai. If you want to watch the latest stuff on YouTube, it's going to be right here. Okay. And I'm not going to have any dynamic stuff on this page. This is just like, a a static page. The one thing I could do that's dynamic is maybe add more of these things down here at the bottom. But anyway, I just wanted to point that out to you. If you haven't taken the free trial and you want to go to tv-trades.ai and you can sign up for the trial right there. All right, you'd be the first one signing up using that site since I just created it the other day. That is actually to replace the tvtrades.com. I'm going to redo this site too, the targetviewtrades.com. On this page here, the targetviewtrades.com, you can also take the trial from here too if you want to. But this is where I have the sign up for the next webinar. All right. So the next webinar is going to be on, it's not going to be on 2/18, it'll be on 2/25, it'll be the next webinar, next Wednesday. All right, I'm getting back on my Wednesday schedule. And I'll be on my Wednesday schedule from 2/25, then 3/4, 3/11, then I'm going to be off on 3/18, and then we should be able to do 3/25 and 4/1, 4/8, 4/15. Then I'm going to be off, but you guys won't be affected by that for a couple days. Yeah, we should be able to stick to the Wednesday schedule for a while now. So this one right here will say 2:25 when I'm done with this meeting. It'll say 2:25. Okay. Now the option stuff. I wanted to get into that with you guys because the options were killing it until last night, and I did make a couple of mistakes last night, not in picking the right ones, but in giving you the information in Telegram. The stuff that I stuck out here in Telegram. A couple of these had bad info on them. I think Apple was off, and Amazon was off, and yeah, I think I'd done the wrong expiration date on those two. But it wasn't a great day for the options yet. These options don't expire until Friday. So if you bought them, then a site that shows how to set up the lines below the charts. Johnny, if you go, let me think, do I have? Well, I'll show you. I'll show you how to do it, Johnny, okay? All you have to do, I made it really simple, actually. All you have to do is go in, put in your password, and click on this, and it'll set it up for you. I'll show you. Just add the TV Trades range trigger, like that. Right? And it's got this like this. It's not a step line. This line right here is the same as this line. It's just this one is a step line. If you come in here and you put in the password, which I know I haven't changed in a long time, but put in the password and then just click on Synthetic Divergence line. And it does it for you. Okay? You don't have to do anything else. Yeah, the question, oops, the question, I didn't mean to do that. Oh well, it doesn't matter. The question just came in, is it always Friday's expiration? Scott, I mean, you can do it on daily expirations if you want to, but that's 0DTE options, and those will work sometimes, but I like to do it, give you a couple days just in case it doesn't work out. It gives you a couple of days to let it work out. Usually these things, because they're reversal bars that I'm taking it off of, they're daily reversal bars. So let's just look at that. Well, let's look at here. This is the thing right here. All right. This is what it looks like. So when you get a daily reversal bar, like any one of these right here, we'll just go with Adobe. Now this is one of the ones that actually looked like it was going to gap at the open. And Adobe, let's see, the range on Adobe today, it said 250 last night is what it closed at, and the range on today was 122 to 230. So Adobe didn't do anything that we wanted to do today. But what I'm looking at night is, did it go through this on the way out? And I'm just giving you a broad stroke of the ones that actually did meet that qualification, that one qualification. What I'm not doing really, and I probably will start doing, that'll minimize the number of trades that you actually get, would be doing trades that are going to give you reversal trades with the trend, okay? Because reversal trade with the trend is likely to keep going beyond the current bar. But because these are reversal bars, you would expect the very next bar to be the one that actually triggers and moves in your direction, right? And a lot of times these, the 2 days leading up to today, most of them did that. Like I think out of 25 of them, 20 of them did that. And then today we come along and I think out of the 10 that I think I had this time, we had 1, 2, 3, 4, 5. Only 5 of them this time actually went to the point of profit. And that brings me to another thing. Hang on. The question, Philip, if you place an options trade before the market closes, do you have to worry about the stock gapping up on the open or going past your stop loss? It's not really. If you're buying them, Philip, you don't really put a stop loss in. Your risk is limited to what you paid for it. So like the things that I was showing you in here, let me bring that back over. Okay. I mean, you actually want to have that gap, but you want it to go in your favor. But these things like these Southern ones right here, they're 80 cents for the 9250 calls. Now, the Southern didn't end up going anywhere today. It had a high of 87, so it would have been $87 instead of $80 is what you could have gotten for it for the 9250 calls. Now, I don't know what it's at right now. We can go look at it in just a second, but but that's the most you're going to pay. That's the most that you have at risk. Okay, if you buy it for like 80 cents, or it's going to be $80. You just move the decimal over 2 places. Be $80 is what it would call for one of those calls, and your risk is limited to that $80. Now, what you want to have happen is you want to have overnight. You want the price to gap for a call. You want it to gap up. So when it opens up in the morning, these things will be doubled in price, and then you can just bail out in the morning. That's what you want to have. And so what I'm suggesting then is this: if you buy more than one, a lot of times in the morning these things will gap up. If they're going to have a gap, they'll gap up like 25%, and you can make 25% just on the gap immediately at the open. If you set it up with your whoever your broker is for your options, you can set it up so that you're going to take a 25% gain. And if you have multiple on, you could have one set up at 25%, one set up at 100%, and then in the morning it could jump 100% pretty easy. The thing with options is you can't, don't think of it like you actually own the stock, okay? Because it can go up and down in price dramatically in a day. Like this one right here, for instance, when I checked this out earlier, the low on this was 33 cents and the high was 87 today. So the range of that was 33 to 70, up to 87. So $33 to $87 for that call was the range of it today when I looked at it. It is, I don't know, it may or may not be more than that right now. I'm not sure. I think that was on this sheet right here. Wasn't it? No, it must be on this one. Here it is right here. Yeah. This one. So we're looking for it to go up today, all right? Because is this a daily? No, this is a 4-hour. That's right. I was looking at something with Jessica. If you look at it on the daily, we were looking for it to go up because last night it went down into the oversold crossing there. So we're looking for it to go up today, and it gapped down at the open instead of gapping up. It gapped down, and it's been going up a little bit since. So it's been pretty much break even all day. But this option doesn't expire until Friday, so you can hang on to it until Friday. And it should, what I was looking at, and this is something that I wanted to point out to you guys. See, we're in an uptrend right here, and this was a 50% retracement of this leg up. It's actually a complete 50% retracement right now. It wasn't earlier. It wasn't a complete 50%, but now it really is. Oops, I'm trying to draw it for you so you can see that. Oh, man, come on. Click on that. Did it highlight this time? Nope. I don't know why it's not letting me. I'll do it this way. Because I'm clicking on the wrong thing. That's why. Duh. I meant to be clicking on that. There we go. Okay, so now it's a complete 50%. I thought it was last night. That is a 50% retracement. I was eyeballing it last night, and that is a 50% retracement. But from here, it should have another leg up this big. Okay? So if you bought that SO, and that was the one that I in the Telegram channel. Now, I'm not going to do this in the Telegram channel every day because this took me like a half an hour to an hour this morning doing it. But I said I really like these. If you have not bought them yet, they should be in the money by midday, I think. And they're break even all day so far. But this is what it looked like last night, okay? And what I was thinking is that by the middle of the day, it should be up in here. And it hasn't done that yet. But this is a leg. This is a retracement of the leg up, so it should have another leg this big. And if it does, even if it gets up to the top of this candle right here, at 94 or 95, that option was a 92.75 or 92.50 or something like that. It would be, it has some real value in it. Okay. So I wanted to just point this out, and this right here, this is one of the lists that I pull stuff from. Okay, I can give you the link to this list. I can give you all the link to this list right now if you want to go and look at this. All I do when I'm picking this is I just go through and I click on this, Nike, and does it have it? No. Apple, does it have it? No. Microsoft? No. Amazon? No. Walmart? No. JP Morgan? No. Verizon? No. Johnson & Johnson? No. Home Depot? No. Procter & Gamble? No. 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 And this is, I just go through and I find the ones that do actually qualify. And what I should do, and I haven't been doing, is maybe just find the ones that qualify with the trend. Okay, and this is on the daily. So I could actually do this on a 4-hour chart too. This one right here, whatever that is, Honeywell, Honeywell, that's what it is, Honeywell. This one right here suggests tomorrow morning it's going to go up. Okay, that's what that one right there suggests. It's 303, so it'll probably not change much. I can just use my spacebar. That will go down one. That's pretty cool. Thanks, Dan. Yeah, well, I mean, the maximum, Travis said it looks like the SO earnings are tomorrow, so it could be really good or bad. But, I mean, the worst it can be is the $80 you spent on it, right? But the best it could be multiples of that, many multiples of that. So, that's probably why it's stagnant today. Okay. And Microsoft is a buy too. Did I go through that one already? Did I hit Microsoft? I thought I did. I thought I hit it up here, yeah. Where am I at right now? Sherwin-Williams. They really do make good paint. Microsoft is right here. That was a buy, you said? No, it didn't go through it right here. Okay. But that's all I'm looking at. And, I mean, you guys can do it too. I'll give you the link to this right here. Copy link. So you can all have this, oh, I was putting it in the wrong place. Put it over here. And I'll send it there, and I'll answer the question that was posted on. So what time do we do this, at 3:45 or later was the question. Confused about using the daily chart, 4-hour chart, half-hour chart when looking to buy options at 3:45. Okay. I'm looking at the clock down here at 3:45, and I'm looking at the daily options. Okay. So I'm not looking at the clock on here because there is no clock here that's going to say 3:45. I'm looking at the clock on my computer. That's this clock right here. That would say 3:45. Okay. That's what I'm looking at. And that's, you go through them here, and, like we just went through all those, we got all the way down to Sean. We only had one buy out of probably, 30 of them. And there's 100. So you got to go through all of these, and that is a lot easier. That is a lot easier. What Dan just told me. Just click this. And just keep going. That one right there would be a sell. It'd be a short. You'd be looking for a short here on this, whatever that is. And that would be against the trend. You see, because the trend is up right here, so that'd be against the trend. So if you want to do something with the trend, then that's not going to be the one you want to do. It seems to be taking a little longer to load it when I hit the space bar. Here's one right here. This one would be a short. Now, this one, it's got lower highs right here. It's got higher lows and lower highs, so it's at a point right now where it would be a pretty good short, I think, because it'd be off a trend line right here. But this is saying to sell. It's saying to sell at the open, or to sell, or to buy puts right now. That's what I just pasted in there, Wayne. This list, it's called a watch list. Okay, that link that I just gave you guys, I'll put it here again. Okay, that link right there is a watch list. So if you click on that, I'll do it right here. This is what happens when you click on that link. Okay. It brings this up. If you have your stuff open, it brings this up, and this is your watch list now. Okay. So, how do I make it stick in yours? I don't know. You want to download it somewhere. Red list, price, technicals. Here it is right here. I think you go right here. Download list. No, not as text. What is that? Nope. This is a share list. That's one I just did for you. And this is the link to it. But this is the actual list. So you have this list, and then I come over here. Well, over here, and I go in here, and that's my red list. But I also have an S&P 100 list. Okay, and I have all these other ones you can go through, and you can go to open list right here. Right, and go and just get whatever list you want to use. The red list is the one that I was just going through with you guys, though. Okay, and I don't remember exactly where we got down to MU. But that's what you would do. You just go through like this. Like MU would be a sell right now. I should be writing these down. MU, and what was the other one? Sherwin-Williams? No, but it wasn't Sherwin-Williams. Honeywell. Is that it? Yeah, it was this one. Honey. That's a put. That's a call. Oh, the honey is a call. The MU is a put. You just go through them all like that, and just drop down. And I don't want to go through them all right now, but that's what I've been doing, right, at the end of the day. And if you go through them and you only take the ones that are actually with the trend, then those are ones that you might hold on to a little bit longer. Okay, you might not just, there's one right there. That's Exxon put. The ones that are with the trend, like this is not with the trend right here. So something that's not with the trend, this is kind of choppy in here, the SLB. But that would be a put. Something that's not with the trend that's kind of choppy like that, you could go either way, but you're going to be looking to take money early. Okay, but something that is with the trend, you might want to consider letting that one ride, making a little bit more money on that one. Okay. See, so far we have 4 of them for tomorrow that have come up, and this is all I do. And this might change by the end of the session, but it probably won't. These are daily. So the bar is going to have to move quite a bit for this to change. Oops, that was one right there, wasn't it? No, it wasn't. It was outside. You see how the blue is outside the cover? I don't like those. See, I'm getting this done now, so I don't have to do it later. And we'll all have this stuff right now, so you guys will be able to be ready for it, and you can go check out your options. And I'll actually be trading. This is actually good. I'd rather do it right now than we get to the end of the session, because that's when the good trading comes in. Starbucks last week gave us a really good one. Apple also gave us like 800% on one day. There's not too many of them right now. Oops. Target? Nope, it didn't quite make it to the bottom. Guild was one that we did well on, 92% one day and then 200% the next day. And that was one that one of you guys had a lot of shares in. Okay, so we don't have a lot of them today. There's one right there, TMO short. And that was it. So we only have 5 today. 4 puts and 1 call out of that list anyway. But that's all you have to do. Okay. Yes, Hal, I was just making it solely on this stuff right here, the synthetic divergence with the range trigger. Okay. If you go back and look, whenever that happens, the next bar is a reversal bar. So it doesn't matter what time frame you're looking at. The next bar is usually a reversal bar. So this is one way to take advantage of that without you having to sit at the charts all day. You can place this trade when you have this divergence right here. at the end of the day, when this bar closes way up here, at the end of the day, or just before the end of the day, when this bar closes way up here, you would buy puts for the next morning. And this one gapped down the next morning, gapped down to there, and ended up closing way down here. So that's a huge difference. That's a huge gain in a put. Okay. Now, not everyone works, obviously, because half of today's didn't. But usually when they do work, they work really well. And remember, you're buying, your risk is limited to what you paid for it. Okay. So if you don't like how much it costs, then don't buy it. And this one right here, right now, this is TMO. Let me just go and get this. I'm not going to bring up my Schwab account, but I'll bring up a different account here that you guys all have access to. Here. Now, you can't trade from this, but I'll just show you. This is Yahoo Finance. If you go to TMO, it's going to, this is delayed data, but thermal for sure. So we're looking on TMO, we're looking for puts. You go to options, and this is the way that I like to do it. Now, February 20th is the expiration date, right? That's Friday. You gotta make sure that. And go up here to options and you can use puts. And then usually the one second out of the money, like these 500s right here, those are usually the best price puts. You see right now, they've gone down a ton today because it's going up today. So they're cheap today, right? So if you click on this, we don't know what the close is going to be right now. The previous close was at 585, and the day's range today was 180 to 680. All right, but it's gotten killed today because the price has gone up a lot. So this one right here is one that I would look at tomorrow morning. I'd look at the 500 put. And so this is TMO. So what I would say is look for the 500 put for Friday, and the price right now is 585. I'm sorry, the price right now is not 585. The price right now is 180. Okay, 180. But when you're doing options, let's go back and we'll look at the actual price here. Okay, let me hit refresh on this for you. When you're doing options, it's got a spread to it, right? It's got the bid and the ask, and you can usually split the bid and the ask. Now this one doesn't have a lot of. It's got a little bit of open interest, not a lot. It's got decent volume, not a ton. The thing about options is you have to have some. You got to have some open interest. You got to have somebody that's going to buy it from you when you're ready to sell it. But the bid and the ask, you can usually split the bid and the ask. Okay, that's kind of why they're saying it's 180 right here. The last sale was at 180 apparently. But if you split the bid and the ask, whatever that happens to be, between 140 and 265, that is about 180. 65 plus 60, that's 125. Divide that by 2, that's 60 cents. It's really right around $2 is splitting it. But that's what you would do. And you put in your order to split it if you want to. I mean, you can't just buy it at the ask if you want to. But it's up to you. The 505 put had more volume. Okay, well, the volume and the open interest is what you really want. You got to make sure you have some open interest. And right here, I don't trust this. If I were to go and look at Schwab right now, I bet the open interest is a lot higher than that, and the volume is probably a lot higher than that too. This is Yahoo, free Yahoo stuff, and it just gives you an idea of what it is. This stuff is right. The bid and the ask and the previous close, that stuff is correct. The open, that stuff is all right. But the open interest and the volume, I don't really believe that in here. Okay. No, hell, that's what I was just saying. I like to buy 2 out of the money. Okay, this would be 2 out of the money. Right, this one right here. Okay, and yeah, this does have more open interest and it has more volume, but you got to have some open interest because you got to have somebody that's going to buy it from you when you're ready to sell it. Open interest in Schwab is 76, is it? 156. Okay, 156. Okay, so it matches up. Okay. Yeah, that's the way that I usually do it when I buy them. It's usually going to be this guy right here. It's usually priced pretty well and has good reaction. The delta on it, this doesn't show the delta but if I had the delta on it, I think it doesn't have an advanced on here. I don't know if it does. Click on this, does it have advanced over here? Yeah, advanced chart. Did I give the Greeks? No, it doesn't. Okay, well, anyway. It's all good. That's one way that you guys can all just go and check it out if you want to. Okay, oops. Didn't mean to stick that there. Do you buy the options right before the close? Yeah, I mean, you could do it right now, John, if you wanted to. They're not going to change much now between now and the end of the day. They might. That's why I like to, if you narrow it down to, like, I got it narrowed down to 5 of them. And if I go look at those 5 at 3:45, the market closes at 4. So if I go look at those 5 at 3:45, and they're still where they are, like we can just do that. We just go in here and say, all right, the ones that we're interested in are Honey, HON. We're interested in that one. MU. We're interested in that one. Micron. XCM. It's XOM. Read my own writing. XOM. Exxon. I'm not sure if that's SL. Yeah, look, it's going to be down here. Did I take it out of the red list or did I take it out of the other one? SLB. Okay, it is SLB. SLB. And the last one is TMO. Okay, so these are the 5 that we're interested in. And if I do this out to 5, so at the end of the session, or when we get closer to the end of the session, we want to make sure that these all still look like they're going to give us what we want. Actually, this is not the right one. If NT is not right. So Honeywell, TMO, MU, XOM, SLB, Honeywell. There should be 5, right? So I'm missing 1 here. SLB is what I'm missing right here. SLB. Okay, that's right. So if we come back and look at this, at 3:45, and all these still show the same thing. That says to buy puts, 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 and this says to buy calls. That's what it suggests. Okay. XCM, was that on there? XOM. XOM is Exxon. Okay. So you can. You can go out there and do it right now if you want to, but the last 15 minutes, sometimes things move around a little bit. Now, it's on a daily chart, so it's not going to move that much. It's not going to move these indicators around, I don't think. It's not going to have that big of a change that it's going to move the indicators around. So, you can go buy them right now if you wanted to. There might be some last minute action going on with the options, but I doubt it. It'll make that big of a difference. Okay, so that's what it looks like right here. So if I make a screenshot of this, and I'll stick it out in the Telegram channel right now. Okay, and that'll be from the meeting. And we can look at it all tomorrow. Alright, now I've hardly made any money yet, so let's get in here and make a little bit of money if we can. I'm going to bump this down to a 39 range because that's what I was using earlier. I went all the way down to a 19 range. We did have FOMC minutes come out today. I don't know what that did to the markets, if it did anything to the markets. Let's look at this on a 30-minute. Okay, so the FOMC meeting minutes came out here at 2 o'clock. Okay, so it sold off when it came out. Back to a 7 range on this. Alright, so let me find some DOMs and see if we can put some trades on. Okay. This was just a nice purple bar trade right here. Okay. Now this is a 19 range. Okay, 19 range. I gotta make sure I got the right bracket on here for that. Let me just make sure I do. I have a 19 range, 25 by 45 bracket on. Okay. Alright. So, right now, if we get a down close on this, it's going to be a purple bar, I think, right now. And we'll take that if we get it. Alright, we didn't get it yet. But, and this over here on the ES is a shorting opportunity here. Now, that's already gone into profit a little bit there, so if you didn't get into it, it's probably too late to get into it. Okay, it's just barely touching it right here, but the synthetic divergence. And it just actually gave me a break even. I did get into it, and it gave me 4 ticks in profit and took me on a break even. So here's the purple that I was talking about a second ago, right here on the NQ. So you can jump on that. So I just jumped on it right here. Okay, and now we'll see. It looks like it's going to stop me out. It did stop me out. Okay, so let's go put both of those in. Wednesday totals. It's just one. It's now 3 trades and 1 stop out. And on the NQ, we're at minus 25. And that's where we are right now. Okay. So go back here, and we'll see what else we got going on. The NQ gave a black arrow right there just a second ago from outside the band. That was a valid trade. And it did not have any synthetic divergence saying it was going to be a reversal bar. So that should move down pretty well. This is nothing right here, right at the moment. And that, actually, I think it gave me 4 ticks. Let me just go see if it did. Because my stop should have bumped to plus 4 ticks on that. It did bump to plus 4 ticks, but it slipped me 3 ticks, and I ended up getting just 1 tick out of it. I'll show you. Here it is right there. And I'm getting just 1 tick out of it. So we'll go put that in here. So 4 trades, and this is minus 24. Okay. There are just so many trading opportunities available. You kind of want to pick something, you know, like that was another 4 ticks right there, and that was a synthetic long. Synthetic divergence long right there. And it went 10 ticks into profit and bumped my stop to plus 4 ticks. That last one. It's got another one right here. It just did it again. Now my stop's at plus 4, go plus 8. Okay, so that was 2 more trades. Both of those synthetic divergence long trades. And right now, it's actually giving a synthetic divergence short trade. The synthetic divergence on the NQ is a lot. Okay, here's a synthetic divergence short trade on a smaller time frame. And whoops, I didn't mean to do that. So there's 8. There's a whole bunch. Is it going to give me all 45? Nope, it didn't give me all 45. Okay, well now it's got a white bar long trade, and the white bar long trade doesn't have something suggesting it's going to reverse. Let me just write down what I did, okay? Because now I don't know what I got on that last NQ trade, but I know we got 3 more trades. Oh, that's a 7. We had a plus 4. Plus 8, and then we had that bigger NQ trade. Let me see what I got on that one. NQ gotta go down to the bottom here. It was 78 to 83. 70 to 83, so that's what? 5 points, 20 ticks. Okay, so we had a 4, a 20, and I thought we had an 8 in there too. Let me just see. It was a 7, 83 to 84, 75. So a 20, a 4, and a 7. That's 31, so that brings us up to 7. Okay, that's a lot. Let me go all the way down to the bottom. Now, you kind of got to pick. You kind of got to pick a trade that you're going to do. You know, me trying to do every single trade that there is coming up right here is just going to confuse everybody. I don't really want to do that. This white bar short right here on the S, that's a pretty easy trade to take, right? The mid band is red. We don't have anything suggesting it's going to reverse. So here it is on the S. And it hasn't gone 4 ticks into profit yet because the stop hasn't gone to break even yet. That is a white bar long over there on the NQ. And that one I'm going to lock in 8 on, and we're out with 8 on that one. Now that did not suggest it was going to reverse either. Okay. So that's 8 more on the NQ, and this is a purple long now. White short turned into a purple long here. So I'm just going to stick with what I took to begin with. If that happens, if you happen to have something that goes against the trade that you're in like that, what I do is I just stick with the original trade. Okay, that was what I made the commitment to, was the original trade, the original direction. So I'm just going to stick with that. If I stop out, I stop out. I mean, you could just get out since you have conflicting directions. Get out and break even. But I usually just like to stick it out and let the original premise work itself out. So that was 8 more on the NQ, right? That brings that to 15, and this to an 8. Okay, it's 3:29. We haven't even got to the busy trading time yet. I might flip the NQ back to a 39 range. 19 is just a little too fast. Okay. Right now, for everything, if I was doing it just that, then I might be able to do just that. But let me flip my DOM back to that too. Okay. 39 range, here it is. Targets, good. Okay. So my DOM's set back up for the 39 range. And we're still in the ES. Okay, and those are a whole bunch of other things. We're going off my headset. Does anybody have any questions about this stuff right now? About any of the stuff that I've done? I went over a lot of things in this session so far. The ES is really struggling to figure out what it's going to do. Now, I'll get a -10 on that. That'll put us at -6 on the ES if I stop out. And we did. Eventually stop out. So let's put that in. This is 9, and that's 2. And this ends up at -6. We're break even on the session right now. Okay, well, that's alright. We have plenty of time left. We haven't even got to the busy trading part yet. Alright, so let's go here and just look at this again. Was it that one? No, it was this one. Has anything changed? Nothing. Okay. The option prices might have changed, but so far, it doesn't look like anything's changed. Now right here, we got the gray arrow right here. We're outside the band, we got the gray arrow, and we're not going to have synthetic divergence. Okay. We got another gray arrow, and we're still not going to have synthetic divergence. Stock and today's strategy. I honestly haven't been looking at it long. The question is, how long have I been looking at the stock and today's strategy? I haven't been looking at it long. It's just a matter of, you know, the mechanics working the way they should always work. You know, the reversal bar being a reversal bar, and the very next bar going in the direction. This is a short here. I just took this black arrow short. There's nothing saying it should reverse on this bar. Let me see if that is. It is always on top. Okay, and please check for BLSH put option and see if it qualifies. Okay. BLSH. Let's just look right here. That's going to manage itself, kind of. Let's go on one of these other ones so I don't mess that up. Okay. LSH. This guy. It does qualify. Alright, the ES just started moving pretty good. I'm going to go to +2 on that. Right. +4 on the S. And we're out with 4 on the S. Okay. Yeah, this is kind of messy the way it is right here, though, Angem. Because this is a 50% retracement of this. Well, it's not even a 50% retracement of this leg down. It could go up some more here to complete the retracement, but it's really choppy and sideways. I don't know what the options look like on this, how much open interest there is. You know, I don't know how much this actually trades, but but this is suggesting you would buy calls right now, Angem. That's what it's suggesting. It's going to go up. Okay. All right. So on the S, we got 4 ticks there, right? So we'll add that back in here. On the S, right now at -2. And this is 10 trades now. Okay. Go back in here. See if we have anything else coming up. This is not a trade. This is not a trade. The black arrow was what we took right there. We got 4 ticks on that. Okay. But yeah, Scott, it's not a matter of doing it a whole bunch of times. I mean, I know how options work, and I know that the synthetic divergent gives you a reversal opportunity. So whenever you get synthetic divergence, the next bar should reverse from the close of the bar that you just had it in. So just using options is one way to take advantage of it. Okay. And so this went down, just about down to the mid-band, and it reversed. This is not a trade here. This is not a trade here. So there's a chance that we'll get some arrows going down from here. So there would be counter trend arrows going down. Now, if we did get them and we had synthetic divergence going in the opposite direction, you would stick with the synthetic divergence. Okay. So on a down close right here, we got a black arrow, and that is not giving us a synthetic divergence. Okay, we don't have the synthetic divergence here. So that's a valid trade there on the NQ. Valid black arrow. Here it is. After it goes 10 ticks, it's going to bump the stop to +4. It should have already bumped it to plus there. Oh, +10, I forgot. I changed it to a 39 range. +10, and we'll lock in 16 right there. Okay, so 16 more on the NQ. And neither one of those were the synthetic divergence right there. Okay, the blue, you see how the blue step line came out of the cover? Or blanket, as Jessica calls it. So that was what, 16 more on the NQ. So we're not going to have any kind of a mid-band trade because it hasn't hit the mid-band. Okay, so this is actually a synthetic divergence short right here on the NQ. It crossed the corner right there as it went out of the cover, and that one actually just bumped to +10. Here it is, right here, and just gave me 10 more. So we're getting there after having that one stop out. This is arguably synthetic divergence right here. I'm not going to go for that. We'll wait until we get something that's a little clearer. Okay, and this time of the day it's 3:37, so things will start moving pretty quick here, I think. Alright, does anybody have any questions about all this stuff? I've been talking and trading here for the last few minutes, and just want to make sure you guys all get it. I mean, I get it, but I want to make sure you guys get it. You know, the option stuff, that's all just extra. Goes on top of the futures trading stuff. And you see how I'm using the synthetic divergence to qualify trades? And how you can take them all together if you want. I mean, you can just stick with the one market if you wanted to. I mean, you can just stick with the ES or just stick with the NQ. Or whatever market you want. At the end of the day, there's probably going to be a ton of opportunity. That is something else. I've said this in the past. I just want to say it again. You know, I say you should have some goal that you want to achieve every day, just some dollar a month that you want to achieve every day, and that's good and that's true. But you have to be able to do it consistently. And if you're not consistent, if you're not getting consistent results, well, one, you probably don't want to trade real money if you're not getting consistent results. But when you're in demo and you're trying to get consistent results, you know, we have this thing called the 24/20 blueprint, where, you know, if you trade to, like, if you get $100 a day and you quit trading, you know, over time that's you had a contract for every $2,000 that you get in profit, and over time that's going to be, it's going to turn out to be something, and it does. You know, I did it from 0 to 20 contracts, and I ended up averaging $7,400 an hour, I think, by the end of it all. But but you have to be consistent. You have to be consistently profitable and get your goal pretty much every day. And if you don't do that, you know, if you're stopping out and you're making mistakes, or you hit a streak where you're not, you know, you stop out like 4 times in a row, you know, that 4 times in a row might wipe out 4 days worth of, you know, the goal for the day if your goal is just $100 a contract. So that throws, you know, it kind of throws you, it sets you back a whole bunch of days in that kind of scenario. So what I would suggest is pick a time frame where you like to trade, pick a market that you like to trade in that time frame, and just trade that time frame. And whatever you get, at the end of the session. If you have, you know, if you're plus $300 per contract, you're plus $300 per contract. If you're down, you can set a max loss for yourself. Like, you know, if your max loss is going to be $250 per contract, you know, if you're down $250 per contract, you're down $250 per contract, and you stop. Or if you never get to $250, you know, you're down whatever you are. But you have that time, and it's time-based rather than dollar-based. Because the whole idea is to build confidence in what you're doing and the trade setups that you're doing, you know, that you're using. And, you know, you want to be able to take them trade after trade, even when you stop out. Like, you know, we started out with a couple of stop outs in this session, and it doesn't slow me down this morning. I mean, yesterday, you know, the first 30-something trades yesterday were not stop outs. They were all profitable for me. But this morning, I think 3 out of the first 6 trades, I think, were stop outs this morning. And, you know, from day to day, it changes a lot. This right here on the NQ, it's a synthetic divergence, long right there. Okay, it hasn't gone enough into profit. It's got to go 16 ticks into profit, so it's going to get up to 30 right here to bump the stop to break even, and then it'll bump to plus 10. It won't just bump it to break even, it'll bump it to plus 10. Okay, and almost there it is, bumped it to plus 10. Okay, so I was just going to lock in another 8, but we're out with 10 on that. That was synthetic divergence right here. Hit the corner on the way out. This is a short right here. I missed it. This was a short right here on the S. At the open of that bar right there was a short. It's gone too far into profit now to be able to take it. But you see it right there. Synthetic divergence short right there on the S. You are welcome, Philip. Again, check this site out. Let me know what you think. tv-trades.ai. It's all the same stuff as on the other one, but this one is just kind of put together a lot neater. And when I'm done with this webinar, you'll be able to watch it right here because it'll be in the playlist. This is my playlist on YouTube, and you'll be able to watch this webinar right here. It'll be at the end of my playlist. And if you click on this, you can do view full playlist on YouTube. And there's a whole bunch of things in here. All the things that I've done. There's hundreds of them. Okay. So, yeah, check that site out. Hang on, let me go back and answer your question, Michael. 10:05:16 on the ES. Which trade did you take the divergence arrow? 10:05. Control back. 10:05, right? On a 7 range. Okay, here we are. This one right here. This is okay. This is something that I had shown. This isn't actually the synthetic divergence because the blue is outside the blue right there. But if it was an actual synthetic divergence, you would take the synthetic divergence right here. Okay, 10:05. I didn't miss it. Okay, 10:05. This one right here. All right. Yes, you take the synthetic divergence on this, and if the synthetic divergence happens, it goes like this. But if it stops right here, all right, and this bar or the one right after it continues in this direction, then you can take the black arrow to go with it. Okay, so right here you would take the synthetic divergence. You don't go against the synthetic divergence because that's a reversal signal. Okay, so if you have a black arrow and you got the synthetic divergence, that's what that's for. It's to filter out the black arrows that don't go in the right direction. Right? This one right here is pretty much the same thing. It wasn't exactly the synthetic divergence because it came out of the blue, but that's what you're looking for. Right? That was why I created this whole thing to begin with. That's why I created the whole thing. Do I have an ATM for the 39 range? I do. I'm actually using the 31 range ATM, but let me just go and tell you what I have hooked up here. It's a 36 by 50 is what I use on that. Stop goes to break even after 16 ticks in profit, Dave. Okay, and you never sent me your Telegram channel, so I could give you all that other stuff you asked for over the weekend. Okay. Michael R, did you understand that? Yeah, you did. You said okay. Okay. Yeah, take the synthetic divergence. If it gives you that, take that. And if it stalls right here, if it stops and then it goes in this direction, then you got the black arrow to take too, because the black arrow should get you at least to the mid band and maybe a direction change. Remember, the black arrows are counter trend trades usually. Okay. Like this one right here, it didn't give you any synthetic divergence on this, so you take this one if it were a black arrow. But the black arrow with, if we're outside the band, but the black arrow with the white bar, you want to take those whenever you get them. Okay, this one right here didn't have synthetic divergence, so you take that one. It's, that's what I created the thing for. And this purple arrow just worked out, and purple bar just worked out really well. Do we have anything else in here? That was not a trade. That was, I think we took that one, right? That was not a trade. That was not a trade. Did I say 3650? Yeah, that's what I use. I know it's on a 39 range, David. It's actually, the 3650 is for a 31 range, but it's been working for me pretty well on the 39 range, so I just left it that way. I know it doesn't give you a full bar length worth of risk, but it's been working well for me, so I just stuck with it. The stop goes to break even. Stop goes to break even plus 10 after 16 ticks in profit. It gives me a lot of 10 tick trades, but those 10 tick trades add up pretty quick. When I used to have 4 tick trades add up, those 4 tick trades don't add up near as fast. Okay, so right here, we're not going to have synthetic divergence, I don't think, if we get a black arrow down right here. Now, if this closes up, obviously we're not going to have a black arrow down if it closes up. But now you have to see what happens with this next bar right here. Okay, you'd be looking for a down close here that would give you a black arrow. And we'll have to see if it ends up being synthetic divergence or not. I don't know if it will be. Okay. Alright. So again, if you guys to register for next week's meeting, you can just click on this. I know it says 218 right here, but it's going to be the same link. You can just go ahead and register for next week's meeting if you want to. I'll change the date on that so it says 225 later. This is at targetviewtrades.com. I'm going to clean this website up too at some point and make it slick like this guy here. Can you believe this? You know how long it took to make that? 3 minutes. You know how long it took to make this? $5,000 in 2 weeks. This? 3 minutes. Crazy. Alright, so this didn't give you synthetic divergence on the ES. Will it be the same info on both sides? Yeah, it'll just be more organized, Jim. It'll be better organized. Yeah, AI is changing the world. And I love the stuff that AI, if you use it the right way, because, I have ideas and I know they can be coded, they can be written, but, part of me is kind of lazy and doesn't want to do all those things. And I can just tell AI what my ideas are, and it'll do its best to write it up for me. Which one? This. I didn't even use my logo on this. Neither one of my logos are on this page. As a matter of fact, I got my caveman thing. That's my mascot. But so easy caveman can do it. That's the idea. But I stopped putting the text in there because I think that could be unshaven Dwayne. No, he's got a mullet. If he had a mullet, then it'd be unshaven Dwayne. Alright, the NQ purple bar just gave me 10 ticks. It just gave me 10 ticks. I think it gave me 10 ticks. I don't know. I took it and it should have gone to 10. Am I at the bottom of this? Is that why it's not letting me do that? 66.75 to 68. It didn't give me 10. It gave me 5. Okay. So 5 more on the NQ. 56. This is 14. I got some slippage on that one. Alright. This is actually a short on the NQ. A synthetic short right there. This was a synthetic long at the open of that bar. This is synthetic short at the open of that bar. This was a purple bar long right there a minute ago. This is nothing over here on the ES right now. Okay, that black arrow that we took a few minutes ago, we got 4 ticks on that. Is that right? What did we get on that ES? EP. Oh, wait a minute, I got more than 4 ticks on that. Hang on. Let me see. EP. No, I'm looking at the wrong thing. Okay, I don't know. I want to put it. If I already put it in, good. If I didn't, forget about it. Alright. So, nothing here. This says short. This said long. And at the same time, the synthetic divergence is going to be a reversal bar. I'm going with the short right here, right now. And it just came back. It took me up. I don't know what that gave me, actually. That one 65, and then there 2.5 points. That was 10 ticks. This is 15. Okay, let's go back here. What time is it? It's 3:52, so we have 8 minutes left. Right now is when things usually start cracking. Where's my ES Dom? I wanted to take that ES trade. I can't find my ES Dom. Where is it? Where is it? It's Russell. Russell. Here it is. Is it too late? It is kind of too late. It is too late. I missed it. Crap. Michael, did you see how I set up that alert earlier? I don't know if you were in here when I set up the alert on the 100 range. You can set that up for the 200 range too. You were talking about getting some kind of a notice or a warning. So you go to 200 range, and I mean there's not that many on the 200 range, but here would have been a long right here. Here would have been a short. Now that went about 50 ticks into profit before it moved up. Here would have been a long. Right here, you would have bought the open of this bar. That pulled back pretty deep before it moved up several hundred. Right in here. This would have been a short. Right there, went down at least 100. This would have been another short. Right here, went down several hundred. This right here, if you weren't still short from that last one, you could have taken a long right here. That would have stopped you out. That's not a trade, that's not a trade, that's not a trade, that's not a trade. So there were a few trades in there that were really good, and a few trades that, one trade that didn't work out well. But several of them did work out fine on the 200 range. Okay. Back in here, let's see, what do we have? We don't have anything there, we don't have anything here right at the moment. Everything's running up right now. So I want to kind of go look at the bigger picture on the ES and see where it's running to. Oops, 30 minutes. Oh, that's huge. Okay, let's go back down to my little world. But closing up that strong today is a big deal. No trade there, no trade there. Because we're not below the midband, at or below the midband, we're not going to get any kind of midband bars either. Okay. 16 ticks to break even plus 10 is what I do, David. At 16 ticks in profit, I go to plus 10. Okay, so now this has hit the mid-band. And now it's, well, it's got to close below it and close back up above it to give us the purple bar. This one too. Okay, but they both pull back to the mid-band at this point. Ouch. That make a lot of noise on your end. That gave us a purple band, a purple bar right there. Okay, so the S has got a purple bar. Here it is. And we didn't get a purple bar over there, but the S, we're going to lock in a couple of ticks on that. And that should make it up to here anyway. We'll lock in 4 on that. Around 4. It should make it up here to 69.06 anyway. This didn't end up giving us, it actually gave us a synthetic short right there on the NQ. Excuse me. Okay. Here's a synthetic short. And there's 14. Where are we at? 3.25. I don't know what that ended up being. I'll go tell you in a second though. But here we got 4 more on the ES, so that puts us at plus 2 on the ES, and that puts us at 16 there. And the NQ, I don't know what I got on that one. That's why my ES was out of the way. 16 ticks on the NQ, so that's 76.82. That's 17 trades. It's a lot of trades. Considering I did a lot of talking in here too. This is, well, it's actually kind of a short right here on the ES. It's a synthetic short on the ES. And this was a synthetic short back here a second ago on the NQ. It's actually a synthetic long on the NQ right now. The short on the S, I'm going to lock in 4 on that, be out with 4 on that. And the synthetic long on the NQ is right here. Okay, I think I messed that one up. I did mess that one up. I should just get out of this. Did I mess that up? I feel like I did. I'm just going to go to break even because I feel like I messed that up. I don't got too many things going on here. Alright, well, now I went to plus 10. Plus 14. It had a purple bar to go with it. Did I mess that up? No, it was okay. It was right here. I didn't mess that up. It went through the blue, out of the blue right there. So that was okay. Okay, so you see how you had the purple bar, but you had synthetic divergence right here, suggesting not to go with the purple bar. So the synthetic divergence countered that, and that was great, right? So I got 14 there, and I don't remember what I got on the S. I think I already put the S in. But we got 14 more here. That puts us at 96 on that, and 18 trades. And I may just wrap it up there, guys. Jim said, trading each day. This is how you're doing it each day, just like I'm doing it right now. And today you were 67 on the NQ, 25 on the S, 22 on the YM in the last 45 minutes. It's good stuff, isn't it? You took the honey long, and it's already up 35%. That's great, Scott. And this is real stuff, guys. It's happening day after day after day right here. Again, it's just about time to wrap it up, so I'm going to go out here. If you have not taken a free trial with us, go here to tv-trades.ai, or you can go to tv-trades.com. Either one of those work. AI's a lot cooler to look at. This one's got just a lot of, well, I couldn't get this to size right. And, yeah, that's one of our logos. And the other logo that we have is this one right here. That's another logo that we have. But go out to either one of those to sign up for the free trial if you haven't signed up for the free trial. Okay. I guess I'll extend the annual discount to anybody who wants to take advantage of the discount. Oh, wow, what was that? Do I have TradeStation open? Did you just hear that bell go off in my headset? I must have TradeStation open. Alright, well, I want you to look at this right here. You see how this didn't have synthetic divergence and it worked out? This didn't have synthetic divergence and it worked out. This did have synthetic divergence and the synthetic divergence worked. Do you see the value in all this? You put all the pieces together. Can you feel them? Okay, well, that's in WordPress. That stuff is. Alright, I showed you guys how to take the free trial and all that. Let me stop the recording here. Okay, again, this one, if you go to tv-trades.ai, then this meeting will be right here in a little while. Once I get it out on YouTube, this meeting will be right here, front and center. It'll also be in here if you go to targetviewtrades.com. This one, targetviewtrades.com. It'll be right here as well. All right, this is the same link to the YouTube playlist. If you have any questions, you can email support@targetviewtrades.com. Support@targetviewtrades.com. Okay, now let me stop the recording right here.